Good morning, everybody. We have a higher trade in the grain markets here early on Wednesday morning. It is 6:30 a.m. Central Time. March corn futures up 8.5 cents at 540 and three quarters, on the verge of posting some fresh contract highs here. March soybeans up 17 and a quarter at 1387 and a half. March Chicago wheat up 6 and a quarter at 671 and a half. March Kansas City wheat up 6 and a quarter at 647 and a quarter. March spring wheat is up 4 cents at 642 and three quarters. Remember, guys, today at 12 o'clock Central Time, I will be streaming live with Ed Ussett of University of Minnesota. We're going to be talking about past grain sales, things like reownership, things like maybe some previous sales you made this year that you're not too happy with. This is going to cover a lot of the mental side of grain marketing, I think, which is I think a relevant and very, very good topic given the environment that we're in here. So make sure to tune into that at 12 o'clock today. And if you can't tune in, of course, the recording will be available on YouTube and on all of the podcast apps shortly following that broadcast. In the headlines this morning, China, of course, made a huge purchase of U.S. corn this week, and that was the big story yesterday. USDA confirmed a flash sale of 1.36 million metric tons of corn to China. That's about 53.5 million bushels. So China, in all likelihood, came in and bought the break on Monday morning and help to rally this market to fresh contract highs here as I speak this morning. U.S. corn is still the cheapest on the export market, and that's really what you need to know. If the demand is there, it's coming to the United States for the time being until cheaper corn is available elsewhere. We still got a little ways to go until there's going to be a whole bunch of South American corn available. So that's the story. I mean, it's not complicated here. China has some better demand apparently, some larger needs, and the U.S. is still the best game in town despite these higher prices. EIA will release its weekly ethanol report later this morning. Traders expect a small drop in ethanol production on the week and a marginal build in stocks. I talked a little bit about the improvement in both spot and forward ethanol production margins yesterday. So ideally, we'll start to see some better stuff maybe second and third quarter. I don't think you're going to see it here today, though. We're seeing some additional crop estimates out of Brazil, or Brazilian crop estimates, rather. Well-followed crop scout Michael Cordonnier pegged the Brazilian bean crop at 129 million metric tons, which is actually up from his previous estimate of 128. He's on kind of the lower end of the spectrum here in regard to what's floating around. There's still a lot of estimates above 130 in that 132 neighborhood. He also increased his estimate for the Brazilian corn crop to 105 million metric tons from 102 previously. I think USDA is still at 109. But in any case, Cordonnier has a neutral to upward bias in regard to the size of both crops in Brazil, mainly due to improving South American weather. Now, speaking of South American weather, early, and this is very early, Brazilian soybean harvest is slow versus normal. They've had some rains, and the harvest pace there to this point is slower than normal. Total Brazilian soybean harvest was estimated to be less than 1% complete as of last week, and that would be well behind. I think they were at 4.2% last year. Rains could also delay the planting of the country's second corn crop to some extent. It's very, very early to become overly concerned regarding either of those matters. Late February into March is really the big soybean harvest window. That's also the big planting window for that second corn crop. So it's too early to get concerned about this. I think in my opinion, it looks like the crops are going to be okay. U.S. dollar trades higher this morning. Traders are waiting on comments from the Fed today. Jay Powell will be out at I think like 1 o'clock Central Time. It's generally expected that the Fed will renew its commitment to what they're calling an ultra easy monetary policy, which includes low interest rates. Most traders and analysts do not see any sort of rate hike from the Fed until 2022 at the very earliest, more probable in 2023 and beyond. So not anything here short term. ADM had its earnings call yesterday, and there were a bunch of kind of snippets here that are interesting from the C-suite at ADM. When you run through this stuff, it's all very positive in regard to demand for U.S. ag products. The ADM CEO says he expects annual corn imports by China to rise to 25 million metric tons as the hog herd rebuilds. Remember, in recent years, they've kind of kept their imports under that quota, which is like 7 million metric tons and change. So ADM expects a large increase in Chinese corn imports. ADM CEO says he expects record U.S. crop export volumes in the first quarter. The CFO says he sees green shoots of recovery for the ethanol sector this year. The CFO says that China has bought roughly 200 million gallons of U.S. ethanol for the first half of 2021. And I think 200 million gallons equates to, it's like 20% of our total ethanol stocks that we have right now, which would be really good if my math is right on that. So that would be very positive. And we've heard a little bit of chatter of some U.S. vessels loaded with ethanol headed to China. I'm not sure how much truth there is to that, but ADM certainly seems to think so, and they would know. They also said they expect tight oilseed supplies and strong crush margins for the rest of 2021. They expect significantly higher Q1 profits in ag services and oilseeds in their North American export, soy crush margins, all that stuff. So ADM generally very a positive outlook here when it comes to just about everything related to grain demand, oilseed demand in the United States. Cattle market ended yesterday kind of mixed. We were a little bit higher in the fat cattle, a little bit lower in the feeder cattle. Not much cash trade to speak of. We did have a better boxed beef trade yesterday, which is noteworthy. In the outside markets, a little bit lower in the stock market. The Dow's down 250, S&P's down 37 ahead of the cash open. The gold is down $11. U.S. dollar again is higher. We have the crude oil up 7 cents at 52.68 in the March WTI contract. Remember, guys, if you need some more information from me, visit my website, www.standardgrain.com. Go to that website, click on Grain Marketing Plan here in the upper right-hand corner. For $49 a month, I will send you my morning email, which goes out every business day at 6:30 a.m. Central Time. It includes any overnight headline you need to be aware of, all my grain marketing recommendations. They're basically cash sales recommendations. They're broken down by crop year, by percentage. It's very specific. It's tracked every day. I tell you not only what I'm doing, but what I've done. That is accompanied by a text message service. You can cancel this deal at any time, guys. $49 a month, billed to your credit card through PayPal. Certainly give that a shot. Everyone have a great day today. Remember, live stream at 12 noon, and I'll have that stuff posted everywhere right after the broadcast. We'll talk to you a little bit later.